Hello everyone. In the last class, we were discussing about analysis of financial statements. There we have discussed what is financial statement analysis, what are the benefits of financial statement analysis, what are the limitations of financial statement analysis, and what are the different tools used for analyzing the financial statements. And there we have discussed that in that chapter we have to study about the tools like comparative statements, common size statements, ratio analysis, and cash flow statements. And there in that chapter we have discussed about comparative balance sheet. Actually, comparative statements used for comparing the financial statements over two different years. So there we have studied the meaning of comparative balance sheet and the preparation also. In preparation stage we have prepared a question of comparative balance sheet where we have analyzed 2 years performance. So every items of two different years will be compared together to verify and analyze the deviation, that absolute change and percentage change. So change in the value of each items will be analyzed in its absolute value. That means how much change is there, and percentage, how much percentage is changed. So that is the speciality of comparative statements. And now today we are discussing about comparative income statement. Comparative income statement or comparative statement of profit and loss is a comparative statement for analyzing the statement of profit and loss or statement of income statement or profit and loss account. The income statement of the company is known as statement of profit and loss. That's why we have told here that this comparative statement of profit and loss. So here is the format of a comparative statement of profit and loss. Let us see how it is to be prepared. So here is the format. We have to prepare the columns like this and give the heading here like this: particulars, that note number you know, notes to account number will be there, that should be written, and previous year's amount. So we have told that 2 years amount will be compared. So previous year and current year. So previous year amount will be shown in the first column, and next current year amount, then absolute change. What is the change between the previous year and current year, and its percentage change. So if we show that in columns, column number A is previous amount, B current year amount, and absolute change is the C, that is difference between column B and A. And percentage change here, that is D is equal to C, that is absolute change divided by base year amount into 100. So this is the way we prepare the balance sheet also. So you know that how to calculate all those things. So let us prepare a question, or let us solve a question. So here, before that, let us see that which are the items in the comparative income statements. So the various items of comparative statements are here. So these are the various items in the income statement. This is actually like a profit and loss account. So just like what are the items in the profit and loss account, all those items are to be written. That means first item is revenue from operations. Revenue from operation. That means revenue from operation means normally we can say that it is sales, main income from the operation of the business. Then other incomes, any other income if it is there, that should be added other than sales. If any other income is there, that should be shown there in the previous amount and absolute amount. sorry, in the previous year amount and current year amount. Then find out the absolute changes. So the total of both will be written, and after that we will write expenses one by one. Expenses, it is their cost of material consumed. How much material is used, that cost should be written. In that other next purchase of stock in trade. That means that how many raw materials are purchased. Then changes in inventories of stock in trade. That means out of the purchase, how much is used. Then we will have opening stock plus purchase minus closing stock. So that like that changes in inventory should be mentioned. Then employees benefit expenses. All the expenses incurred for the benefit of employees. That means the payment for the employees. Then finance cost. Finance cost means cost involved in the financing process for borrowing purpose. So there we have told that while studying about debentures, we have studied that the money, that means discount on issue of debentures written off, will be written in finance cost column. Isn't it? It will be written off from the profit or it will be written off from the profit and loss account or statement of profit and loss under the head finance cost. So that finance cost is here. Then depreciation or amortization expenses will be written. Then other expenses. Then we will total all the expenses. Then can find out the profit by deducting all the expenses from income. That's what it is written. Point 3 total income minus 0.4 expenses. Then after that we will deduct the income tax from the profit, then we will get profit after tax. So this is the format of comparative income statement. Then let us solve a question here. Here is the question. Following is the statement of profit and loss of Sun India Limited for the year ended 31st March 2020. So this is the question. 31st March 2020, the statement of profit and loss of Sun India Limited is given. That is for the year ending 31st March 2020. So the particulars and all the amounts are given here. See, revenue from operation for 31st March 2020, 25 lakh, and 31st March 2019. That means this is the previous year, 19. So 2020 current year, 2019 previous year. Then other income 1 lakh and 5 lakh. Employee benefit expenses 60% of total income. Total income means revenue from operation plus other incomes. It's 60%. And for the previous year it is 50% of the total income. Then after that other expenses 10% of employees benefit expenses. So employees benefit expenses we will calculate, it is 60% of total income and its 10% will be employee benefit expenses. Then tax the 30%. So this is the question. Now let us solve the question by preparing a comparative statement of profit and loss. So here is the solution. Format of comparative statement of profit and loss for the year ended 31st March 2019 and 20. So it is ready. See, 2019 and 2020. Previous year and current year. So let us write the first item. First item will be, yes, revenue from operations. Revenue from operation is there in the question. we can take that revenue from operation for the previous year 20 lakh, isn't it? Here you can see previous year 2019 it is 20 lakh, and for the current year, yes, 25 lakh. Then 25 lakh minus 20 lakh, the difference absolute change 5 lakh. It is a positive change because current year it increases. So percentage change will be what is obtained in column number C, that is change, total change divided by base year amount into 100. That means 5 lakh divided by 20 lakh into 100. So the percentage we get 25%. Next item, other incomes. So other incomes, what about other incomes? It is given here 5 lakh for the previous year and 1 lakh for the current year. So previous year 5 lakh, current year 1 lakh. So there is a decrease. So it can be shown under it's in the bracket, okay, because it is a decrease. So 4 lakh divided by 5 lakh into 100, that means minus 4 lakh divided by 5 lakh into 100. So we will get percentage minus 80. Okay, now we can add the columns. Total income we will get here. Total income is previous year it is 25 lakh, current year it is 26 lakh. How much is the increase? 1 lakh is the increase. So 1 lakh divided by 25 lakh into 100. How much? 4%. Okay. So this is the total of incomes. So you understood that how it can be calculated. So every line you have to calculate the percentage at last column. Okay. So next, all the expenses should be deducted. So we can write expense. In that expense, which are the expense given? Employees benefit expenses is given. Employees benefit expense for the previous year it is 50%, isn't it? 50% of the total income. Total income is 25 lakh, so its 50% is 12 lakh 50,000. And for the current year it is 60%. 60% of total income, that is 26 lakh. 26 lakh into 60%, 15 lakh 60,000. So how much is the difference? 15 lakh 60,000 minus 12 lakh 50,000. 3 lakh 10,000 is the absolute change. So that 3 lakh 10,000 divided by 12 lakh 50,000 into 100, 24.80%. Okay. Now let us write the next item, other expenses. Other expenses for the previous year. Previous year other expense is 20% of employee benefit expenses. 20% of employee benefit expenses. Previous year 12 lakh 50,000 is the employee benefit expenses. It's 20%. That means 2 lakh 50,000. Then for the current year it is 10% of employee benefit expenses. That means 1 lakh 56,000. 10% of 15 lakh 60,000. So there is a decrease in expense. Decrease of 94,000. So we will get the percentage also a minus figure. That means minus 94,000 divided by 2 lakh 50,000 into 100. Okay. So we will get 37.60%. That is minus. Now let us add the total of all expenses. Total expense we will get here. That for the base year it is 15 lakh. So 15 lakh will be written. Then for the current year it is 16,16,000 and absolute change 17,16,000 minus 15 lakh, that is 2,16,000. Okay, so percentage change or percentage 2,16,000 divided by 15 lakh into 100, that is 14,40,000. Now let us find out the profit before tax. How to find out total income minus total expenses. So total income 25 lakh minus 15 lakh. 10 lakh is the total income for the base year. That means previous year. Then for the current year 26 lakh minus 17 lakh 16,000. So we will get 8,84,000. So here there is a decrease in profit, decrease of 1,16,000. So that amount can be in bracket. And there is a decrease of 11.6% of profit. 6%, 11.6% decrease in profit is there in between these 2 years. So we have analyzed and got this much percentage of, or 11.6% is the decrease in profit before tax. So the income tax rate is given previous year and current year. Previous year 40% and current year 30%. Isn't it? So previous year 10 lakh into what is obtained profit before tax into 40%. 10 lakh into 40%, 4 lakh. Then next current year it is 30% of 8,84,000. So we will get 4,42,000. Okay, then balance 42,000. Okay, and here the percentage we will get 10.50. Okay, so that is about income tax. Income tax is to be deducted, then we will get profit after tax. So we can write here profit after tax. Profit after tax for the previous year 10 lakh minus 4 lakh, we will get 6 lakh, and for the current year 4,42,000. That means 8,84,000 minus 4,42,000. So like absolute change 4,42,000, that means 6 lakh minus 4,42,000. So there is a decrease of 1,58,000 rupees. And that decrease in percentage is 26.33%. So this is all about comparative income statement. Okay. Now next we are going to discuss. So this is clear. Comparative income statement is clear. This is easy to prepare. Only one thing is that calculation of percentage. That only you have to little concentrate. Otherwise the format you need to understand and study. Then the things will be very easy. So next let us see common size statements. So comparative statements over. Now we are going to discuss common size statements. See, this common size statement also, there are two types of common size statements. That means comparative statements we have studied that comparative statements are of two types. Comparative balance sheet and comparative income statement. Here there is common size statement. Before studying the bifurcation, we let us see that what is a common size statement. Common size statement is a tool for vertical analysis of financial statement. Vertical analysis of financial statement means a particular year's financial statements will be analyzed. A particular year. It will not be for 2 or 3 years, but it will be for a particular year only. 1 year profit and loss account or balance sheet will be analyzed. That means here either the balance sheet, different items in the balance sheet will be analyzed, or the different items in the profit and loss account will be analyzed. So here we will consider that in the case of common size statement, we will find out the absolute change as well as percentage change. Absolute change, instead of that absolute percentage, how much is the actual change in percentage, that will be calculated first. That will be calculated. So it is a vertical form of analysis done for intra-firm comparison. That means comparison of financial performance of one business organization, not between two different organizations. So there are two different common size statements. One is common size statement of profit and loss, that means analysis or preparation of common size statement with the profit and loss account. Another one is common size statement of balance sheet, common size balance sheet. So let us see that how it can be prepared, the format of common size statement of profit and loss or common size income statement. So let us discuss how an income statement, common size income statement will be prepared. So let us give the heading first. Common size profit and loss account for the year ended, particular year will be mentioned. Okay, so here the headings will be like this: particulars, not number, here absolute amount, previous year and current year. Okay, absolute year, absolute amount, that means actual amounts for previous year and current year. So percentage change, percentage of revenue, that means percentage will be taken here, and here the thing is that the percentage of income, total income will be, percentage will be always be taken as 100. Okay, so all the items of profit and loss account will be compared with that income. That is the specialty here. So as we have told, the income of the, that means revenue from operation of a statement of profit and loss will be considered as 100 here, and all the items will be compared to that revenue from operation. So that is the specialty here. So first item, we know that the first item of profit and loss account will be revenue from operations. This will be considered as 100. So for the previous year and current year, it will be considered as 100. So then after that, all other items, for example, next item here is other incomes. Other incomes will be written here in both previous and current year. Then that amount will be compared with the revenue from operations. Then like that, next total income will be written. Then after that, all other items, like we have told what all the items will be written here like this. Expenses will be written, then cost of material consumed, purchase of stock and trade, changes in inventories, employee benefit expenses, finance cost, depreciation or amortization expenses, other expenses, then total expenses, profit before tax, then tax will be deducted, will get profit after tax. So same way, all the items in the profit and loss account will be written, and we will make the columns for previous year and current year amount. This also will be there in the this much part up to this current year and previous year amount. Everything will be there in the question. Our work comes in the percentage of revenue column. That means percentage of each item with the revenue from operation. Okay. So this is the format. Now let us solve a question. So this is the question here. Prepare a common size statement of profit and loss from the following information. Here some items are given. Item wise information is given here. Let us see what it is. See, here it is given particulars. Particulars, then 31/3/2020, 31/3/2019. 2019 is previous year and 2020 is current year. Which is the latest year, that will be considered as current year, and the year before that which is given will be considered as previous year or base year. So revenue from operation is given, other income given, purchase of stock and trade is there, then change in inventories of stock and trade, then other expenses, rate of income tax, everything is given. So let us see how to prepare this. How to prepare a common size income statement. So the heading will be written common size statement of profit and loss for the year ended 31st March 2019 and 20. 2019 and 20. Okay. So full it is there. Let us 2019 and 20. Everything is there. Okay. So particulars, note number, absolute amount for the current year and previous year, absolute amount for previous year and current year, percentage of revenue for previous year and current year. So this is the heading. Now let us write the first item. First item is revenue from operation. So that revenue from operation for the previous year 7,50,000. 7,50,000 and for the current year it is 10 lakh. Okay, that will be always assumed as 100. So revenue from operation is assumed as 100 and all other items will be compared with that 100 or revenue from operation. So next item, other income. Other income given for the previous year it is 75,000 and for the current year it is 1 lakh. So how much is the increase? 10% is the increase. How to calculate? See, this 7,50,000 and 75,000 is the previous year result. So let us see how to write the percentage in the previous percentage amount column, percentage column. So each item will be compared with the revenue from operation. So here the item is 75,000 other income, 75,000 divided by 7,50,000 into 100. So how much we will get? 10%. Once again, 75,000 divided by 7,50,000 into 100. Okay. That means into 100 means to get the result in percentage. Next we will get again 100, that is 1 lakh divided by 10 lakh into 100. Now let us see the total income. Total income 8,25,000 for the previous year and 11 lakh for the current year. Percentage, here also how to calculate, each item should be compared with the revenue from operations. So for the previous year 8,25,000, 8,25,000 divided by 7,50,000 into 100. Okay, 8,25,000 by 7,50,000 into 100. So we will get 110% because total income is greater than revenue from operations. So in the next current year amount also it will be like that only, that is 11 lakh divided by 10 lakh into 100. Okay, now all the expenses should be written. expenses we can write one by one. See, purchase of stock in trade. Purchase of stock in trade is the expense here. Purchase of stock in trade for the previous year is purchase of stock in trade 6 lakh. 6 lakh can be written here. Then 7,50,000 for the current year. Then 6 lakh divided by revenue from operations. 6 lakh divided by 7,50,000 into 100. That is percentage for the current previous year, and for the current year 7,50,000. This 7,50,000 divided by this 10 lakh into 100 will be the answer. That is 75%. Then comes the next item. After purchase of stock in trade, next change in inventories of stock in trade. So change in inventories of stock in trade means change from opening stock to closing stock. So it is given here for the current year. Previous year and current year are given. Yes, for the previous year it is 10,000 and for the current year 50,000 decreased. So there is consumption of stock shows 50,000 minus. So for the current previous year, percentage will be 10,000 divided by 7,50,000 into 100. Every time it should be compared with the revenue from operation. Next, 50,000 divided by 10 lakh into 100. We will get 5%. That will be minus because 50,000 is minus. Okay. Next item, other expenses. What about other expenses? Other expenses 7,500 for the previous year, 10,000 for the current year. So other expenses 7,500 for previous year and 10,000 for the current year. Okay, so 7,500 divided by 7,50,000. So we will get 1%, and for current year 10,000 divided by 10 lakh into 100, that means there also 1%. Now let us total the expenses. Total expense is 6,17,500 and 7,10,000. Okay, so previous year amount, that means previous year percentage of changes 6,17,500 divided by 7,50,000 into 100, that is 82.33%. Total expense. That means total expense for current year 71,000. That means out of the revenue from operation, or 71% of the revenue from operation is total expense. Or in the previous years 82.33% of total revenue is total expenses. Now let us see the profit before tax. Profit before tax is 0.3 minus 0.4. That means total income minus total expenses. So 2,07,500 for previous year, for the current year 3,90,000. Previous year percentage is 27.67, that is 2,07,500 divided by 7,50,000 into 100. Like that for the current year also. Now let us write the income tax. Income tax is given here in the question. See, income tax, rate of income tax is 50% for both the year. So 2,07,500 into 50%. We will get 1,03,750. Here also 3,90,000 into 50%. So 1,95,000. Percentage we can consider 1,03,750 divided by 7,50,000. Okay, so we will get 13.83% and 19.50%. So 50% of the profit is tax and the remaining 50% is profit after tax. So remaining 50% will be there. That means here 3,90,000 minus 1,95,000 like that. Previous year 2,07,500 minus 1,03,750. Okay. Current year 3,90,000 minus 1,95,000 or remaining 50%. So here also percentage is same 13.83 and 19.50%. So this is the way of preparing common size statement of profit and loss. Now let us see what is a common size balance sheet. See, common size balance sheet will be prepared just like common size income statement only, just like that only, but the difference here is that we have told that in profit and loss account or statement of profit and loss, this revenue from operation will be considered as 100. But in the case of balance sheet, total of assets and liabilities, total of assets or total of liabilities, anyone will be considered as 100. That means for the liability side, total of liability is 100 and for the asset side, total of asset is 100. Anyway, both will be same. So the total of the balance sheet will be considered as 100 and all the other items will be compared with the total of the balance sheet. That is the speciality of common size balance sheet. So here is the format: balance sheet, common size balance sheet, asset 31st March 2020 or 31st March 2020 and 31st March 2019 like that. So let us see which are the column headings. See, particulars, note number, absolute amount for the previous year and current year, percentage of here revenue, not revenue from operation, percentage of the total. The total of balance sheet. Okay, so that will be considered here. So previous year's total will be taken as 100 and current year's total will be taken as 100 here. So let us write the heading. First item is equity and liabilities. Before that, let us see, this is the total. Here is the total. And total of current year will be taken as 100 and total of previous year also will be taken as 100. So that is the thing. Like that for the asset side also, total will be here and both the years will be considered as 100, total of both the years. Okay. Now all other items in the balance sheet, all other items in this statement will be similar to balance sheet. We have studied the balance sheet formats. So there whatever things we have studied, the entire things will be written like that only. No other changes. Everything will be the same. Just like balance sheet. Whatever we have studied in the balance sheet, the same things will be written. See, equity and liabilities, in that shareholders fund, share capital, that also equity share capital separate, preference share capital. Then next item point B, reserves and surplus. Then non-current liabilities, in that long-term borrowings and long-term provisions. Then current liabilities, short-term borrowings, trade payables and other current liabilities. Then after that short-term provisions will be written. So that will be the total of liability side. Then after that, when it comes to the asset side of the balance sheet, point to assets. In that, total assets will be bifurcated into two: non-current assets and current assets. In non-current assets, fixed assets will be there, tangible and intangible separate, and non-current investments, that means long-term investments, then long-term loans and advances. And for the current assets, current investments, inventories, trade receivables, cash and cash equivalents, short-term loans and advances, other current assets. So these are the things. And as we have told, format will be like this, just like what the headings will be similar to common size income statement, but the percentage of the total amount, percentage will be for the total amount of the balance sheet, not the revenue from operation. Okay, so let us solve a question. Here is the question. From the following balance sheet of Sun Limited as on 31st March 2020 and 2019, prepare a common size balance sheet. So that is the question here, and see, the question is here before you. So just like this is balance sheet only, the balance sheet is exactly given. Now let us see how to take each item here in the common size balance sheet. So let us see the solution. Heading of common size balance sheet. Common size balance sheet assets 31st March 2019 and 2020. And the heading is here. Same heading we have told. Okay. So here, instead of amount, here I have written rupee symbol, and for instead of percentage symbol is written. You can also do like that, no issues. Okay, then so here is the format, and first item we know that equity and liabilities. Equity and liabilities, in that next item shareholders fund. In that shareholders fund, first item share capital. So what is given here again about share capital? Share capital 60 lakh for the previous year, and for the current year 80 lakh. 60 lakh and 80 lakh. So share capital 60 lakh for the previous year, for the current year it is 80 lakh. And we know that the total is always 100. So total is 100 here. Okay. Now how to calculate the percentage here? Base year it is 6 lakh. 6 lakh divided by 100, or the total. We know that total, we will find out the total. That total will be considered. Okay, so let us write the full items, then only we can find out the total. So share capital is written. Next item, reserves and surplus. Reserves and surplus 8 lakh and 12 lakh. Reserves and surplus will write 8 lakh and 12 lakh. Then next item, long-term borrowings. So long-term borrowings will be under the heading non-current liabilities. So we have to write next heading non-current liabilities. See, we have to follow the same format, and at least that these numbers which is written in the bold letters are important, that must be written, and all the other items like what is given in the A and B there, if that particular item is there, that then only you need to write, otherwise you can skip that. If you write full format also, no issues, you can write the full format and write the needed item, amount for the needed item, that's all. So long term borrowings, in that long term borrowings, previous year 20 lakh and for the current year 24 lakh. Then next item, short term borrowings 12 lakh and 4 lakh. So short term borrowings will be under the head current liabilities, so we have to write current liabilities in that short term borrowings. For the previous year we have told 12 lakh and for the current year it is 4 lakh. Okay, now we can total both the previous year amount and current year amount. So here it is how much, 1 crore and here 1 crore 20 lakh. Okay, so what we have to do to find out the absolute change of the previous year, let us see, listen carefully. So here we have to write the percentage change of share capital. How to write? Share capital absolute value we have to take, how much, 60 lakh divided by total 1 crore into 100, that's all. 60 lakh divided by 1 crore into 100, we will get 60%. Yes. Next, 80 lakh divided by 1,20,000 into 80 lakh divided by 1 crore 20 lakh into 100, 66.67%. And for next, reserves and surplus also same, 8 lakh divided by 1 crore into 100, 8%, and 12 lakh divided by 1 crore 20 lakh into 100, 10%. Then for the long term borrowings we will write like this, 20% and again 20%, because both the year, first year it is 20 lakh divided by 1 crore, proportionately here 24 lakh divided by 1 crore 20 lakh. Okay, so liability side is over. Now let us see the asset side. We can write the first heading, point 2 assets, point 1 liquidity and liabilities, point 2 assets. In that assets, first category is non-current assets. So what is given in the non-current asset? Let us see. Non-current asset, in that fixed asset, tangible assets and intangible assets both are given. So non-current assets, in that fixed assets, out of the fixed assets tangible asset is given. For the previous year how much, 60 lakh, and for the current year it is 80 lakh. Okay, then next, intangible assets. Intangible assets can be written, intangible assets, what are the amounts? Intangible assets 12 lakh for the previous year and 4 lakh for the current year. So 12 lakh and 4 lakh. Then the next item, yes, current assets, inventories and cash equivalent. So next category, current assets. In that, investments or inventories. Inventories, how much inventory? Previous year it is 20 lakh, current year 24 lakh. So here 20 lakh and 24 lakh. Okay, then comes cash and cash equivalent. Cash and cash equivalent, how much? 8 lakh for the previous year and 12 lakh for the current year. So 8 lakh and 12 lakh. So here also we know that This is 100 absolute change wherever it will be 100 for the total. And here the total, here also the total will be same, 1 crore and 1 crore 20 lakh. Okay. Now let us see the percentage, absolute percentage. Absolute percent of tangible asset for the previous year is 60 lakh divided by 1 crore into 100. So how much? 60% we will get. And for the current year, 66.67%. So next, for the intangible assets, total lakh and 3.33%. And for inventories, it is 20% and 20% here also. Okay. Next, 8 lakh divided by 1 crore into 100, 8%, and 12 lakh divided by 1 crore 20 lakh into 100. So here 10%. Okay. So this is how we prepare the common size balance sheet. I hope all of you understood this. Okay. Any doubts? Yes. So in this way you can find similar problems from your reference book and to solve that. So normally in exam time we may get the questions like this. Here we have discussed first question like this. We may get the questions giving percentage of some other items. So we have to calculate like that also. That type of questions also can be expected. Okay. So this is the end of today's class. Okay. So revise this video once again and understand without any doubts and solve the required number of question papers to clear the concepts. Okay. Thank you very much.